Hey guys, Marcel LeBlanc here, Certified Financial Planner, and what I'd like to talk about today is investor behavior that I see happening a lot. It's very typical, and usually it's because people will let their emotions get involved with their investment decisions, or even their financial decisions in general. But when it comes to investments, this is how it usually happens, alright? This is a typical stock market cycle, if you will. We all know stock markets go up and they go down. You don't really need to understand why this happens, but markets get pushed up and then they get pushed down. Alright? But they typically have an upward trend. But in a typical stock market cycle, close to the top or before the markets start turning around and going down, that's when people get confident. When neighbors talk to neighbors and talk to their other neighbors that how much money they made in the stock market and how everything is going good, that's when confidence builds up. And then everybody kind of jumps into the same boat, pushing stocks even higher, and that's when greed becomes a factor. Because greed is what pushes stock markets over the top, way higher. Again, emotional. It's an emotion that makes people jump on the same bandwagon at the same time. Well, once the party's over and people realize stocks are too high, they have to come back down because the businesses aren't worth what they say the markets say they're worth right now, or there's a recession or something external comes, the markets go down. That's when people start, at first they're just a little bit worried, but they're going to stick it out because they're long-term investors. And then when it gets at the bottom, people get fearful. They're like, oh my god, it's the end of the world, and they will sell their stocks. They bought here, and they sold here. Pure loss. And then by the time they're confident again, they're all the way up here. So they're going to buy somewhere up there. Again, market will go down, they'll sell down here for another loss, and another loss, and another loss. This guarantees that the stock markets aren't going to be your best friend, and it's typically why you hear people say, I never made money in the stock markets or investing or in mutual funds, because they usually made bad decisions along the way. If you're already down here and you didn't sell your stocks or change your investment strategy before here, you can't sell at that point. You have to be confident that it's going to come up, and it will. So the idea here is not to let your emotions guide your investment decisions. If you're with if you have a clear mind, or you work with an advisor who's going to help you with your investment decisions, sometimes around here the good thing to do is to, if you're already invested in the stock market, is to start becoming, as it keeps climbing up and up and up, is to go safer and safer and safer. And when it goes down, you buy and buy and buy. And when it goes up, you go safer and safer and safer. So in, out, 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 gradually. So that if it keeps going up, you're not out of the market completely, you're going to participate and get some of those profits. Maybe not as much as the next guy, but when it goes down, you won't go down as much, and when it goes up, you won't go up as much, but your average will be better than the guy who did the buy, sell at pure losses. So if you have any questions about investment strategies, investment options, or anything else about your financial future, you can visit marcelleblanc.ca, and remember, my advice is free, and it always will be. Thanks again, guys. Cheers.